Well, let's take it straight to the management then. Warren Kevin Harris, who's the Managing Director and Chief Executive Officer of Tata Technologies, is joining us now. Warren, thanks a lot for joining in. You know, there's so much interest in this company. So let me start first with the overall revenue contribution from the Tata Group. We know that the contribution from your anchor clients, which is Jaguar Land Rover and Tata Motors, is about 40%. But there are many other Tata Group companies in the areas that you operate as well, like aerospace, for instance, Air India, Tata Lockheed, Martin Aerostructures, Tata Hitachi Construction Machinery. So can you tell us what is the overall contribution from the group?
You know, we're very proud of our relationships inside of the Tata Group. You referenced the JLR and TML relationships last year. That represented about 40% of our services mix, about 33% of the overall aggregate revenues of Tata Technologies. But we enjoy very strategic relationships as well with Air India, with Tata Steel, Tata Power, and Tata Advanced Systems. And you know, those relationships we believe are not only important to us, but strategically important to the other group companies. And what we've been able to do is we've been able to use those references within the group to accelerate the growth and the contribution of from outside of the group. So, you know, not only are group companies a platform for us, you know, to drive revenues within the group, but they also an opportunity for us to demonstrate our credentials, which we then use to grow the business in areas that the group is not involved.
All right, hi Warren, good to have you on the show. You know, I'm looking for a number. What would the overall revenue from the Tata Group contribute to?
It's less than about, from a services perspective, it's less than about 42%.
Okay, what according to you is a comfortable level then of dependence on the Tata Group?
Well, if you look at our revenues 10 years ago, the majority of services that we were responsible for was delivered to the Tata Group, and again specifically TML and JLR. And yet we've seen the revenues outside of the group grow at a much faster rate than revenues inside of the group, and we expect that trajectory to continue. You know, we've not specifically put a target on it, but we expect to continue to grow our revenues outside of the group at a faster rate than we are growing revenues with other group companies.
What's the steady state of revenue growth then? What are we looking at? FY21 and 22 was affected by COVID. So technically we shouldn't be considering that. FY23 was solid. It was 23% overall, while you almost got to 30% in the first half of FY24. Is that a decent, sustainable revenue run rate?
We have built up a significant amount of momentum as far as services growth is concerned. You know, I think that's a testament to our value proposition. That's a testament to the customers that we have in different parts of the world, and I think it you know, it represents the growth that we're seeing across the board in terms of the ER&D space and the propensity of manufacturing customers to outsource services to companies like ourselves. We think those tailwinds will continue, and we certainly expect the growth trajectory of Tata Technologies to follow suit.
Well, I've been looking at the margin trajectory, and actually it's improved from around that 16.5% odd. You've been doing around 19%. Do you see it improving further from here?
Well, if you look at our margin trajectory, some 4 years ago we were at about 16.5%. Last year we came in at 18.6%, and that's largely driven by operational levers such as improved offshoring and improvement and optimization in terms of our people pyramid. We think a lot of the hard work has been done as far as margins are concerned, but we expect incremental improvement, you know, beyond the 18.6% 8.6%. Our North Star is over 20%. That's what we are, positioning our business plan against, and we expect year on year, incremental improvement from where we are today.
So do you think that you get to around the 20%, and if yes, by when?
It would be several years, but again, I'm not going to give any specific guidance in terms of when we expect to get there.
Got it. Are there any other adjacencies that you would like to get into? Any kind of diversification that you'll be looking at over the next couple of years?
I certainly think that in the coming years, given the impact that the silicon manufacturers, the chip manufacturers are having on verticals like automotive, that there's an opportunity for us to enter high tech. I think things like medical equipment represent an opportunity. That's a regulated industry sector, and I think the work that we've done on both the digital and on the product engineering side of our value proposition will position opportunities there going forward. But we think that there's a significant amount of upside that we can continue to harvest in automotive, aerospace, transport, construction, and heavy machinery. Automotive is pivoting along the technology vectors of autonomous driving, connected services, the move to alternative propulsion systems and electrification, and the move to shared. And if you look at aerospace specifically, you look at projections, the number of aircraft that are in commercial use today is set to more than double in the next 20 years. We've recently been empaneled by Airbus. The group are making major investments in aerospace, and we expect those areas to provide tailwinds for us as an organization. So, we are first and foremost going to be focused upon the industry verticals in which we have a presence and a compelling value proposition. But we'll be open going forward to associated verticals, as I say, like high tech and potentially medical equipment.
Was in fact my next question. When, in terms of a timeline, what are you looking at? When do you think you'll be able to enter some of these new spaces like high tech and the medical equipment space?
Again, we've not put a time frame on it as of now. We will continue to look opportunistically at openings that may present themselves. But as I said before, we are exclusively at the moment focused upon the three industry verticals in which we have a compelling value proposition, and we think that there is significant upside in all three of those industries.
Well, what's the cash in books then? And as you said, you look at opportunistically at various other themes that present themselves. Any thoughts on M&A activity?
At the end of last fiscal year, we had almost $150 million on our balance sheet. The cash position continues to be very healthy, and we will be open to M&A as we move forward, particularly in the context of accelerating our capability portfolio and also entering new accounts. So we've done acquisitions in the past. We've been thoughtful about them. We'll continue to be thoughtful, but it will be it'll be part of our growth plans going forward, and we'll be looking for targets that make sense from our value proposition perspective, and also in the context of the culture that we're looking to build inside of our company.
Right. Well, final question then, and not just with regard to your business, but the street as well wants to understand this. In what way is your business model different from KPIT, which is also pretty much a pure play auto ERT?
90% of our business is auto, and in terms of business model, I think the business models are somewhat similar. I think that in the context of what's different about us, we're not an India out company. We have a balanced onshore offshore proposition, and one of the reasons that we are very protective of that, and we continue to invest in that, is the sort of end-to-end coverage that we have of the automotive value chain. One of the things that Tata Technologies is really known for is our ability to be able to develop full vehicles, and specifically electric vehicles. And in order to be successful at that, one has to manage the stakeholders inside of the companies that we work with. We have to have people in the starting studio. We have to work with the supply chain team. We have to understand the manufacturing constraints, and our onshore teams enable that. And that's a great complement to the offshore teams that we have in India and then in Eastern Europe.
Right, all the best for the IPO. It has been, caught the excitement of investors, traders across the board. So all the best for this one. Well, that's Tata Technologies, the management there talking about the growth